Good evening, everybody. Can anyone hear me? I think I must keep it a bit closer. So fantastic to have you all at Checkout tonight. I think we're going to have a fantastic evening. There we go. Come on in the back. Great to see so many familiar faces, some new faces as well. So for those of you who don't know me, my name is Nick. I head up the product function at Checkout. And tonight we're going to focus on one of the greatest changes in the way that consumers make payments. So it's a pretty big deal, I think. That's why everyone's here tonight. So the format for this evening is going to work as follows. We'll have one or two product leaders from the product team really trying to educate you on all things SCA, and as well as our Unified Payments API, and then we're going to have a panel discussion with our friends from Visa. So without further ado, I'd like to welcome Milena, who's going to introduce you to all things SCA. Give her a hand, please.
Whoa. All right, thanks, Nick. Hello, everyone, and thanks for coming over, and not only being interested in the drinks, but also in the slides and what strong-customer authentication is really. So I'll give you a little bit of an overview and background of the regulation. What does Checkout do to help you be compliant with the regulation, and how you can actually optimize the payment workflow, the card experience, and overall improve your authorization approval rate. We're getting better. Right, so let's talk about the regulation. And in the run-up to the deadline that is set as of 14th of September, there have been recently new developments from the European Banking Authority, or the EBA. So last Friday, the EBA announced that there will be a transition period which can be negotiated with individual national authorities that would deal with issuers and acquirers that still need to get ready for the strong customer authentication mandate. So these transition periods would be set by the local national regulatory bodies, and they'll be negotiated with individual issuers who may get onto the strong customer authentication approach. All right. Thank you. And same for acquirers who still need to onboard their merchants on a strong customer authentication solution. All right, so that's about the regulation, and let's go to what strong customer authentication really is. Okay, so it is an authentication method that must be completed using two or more factors that are individually independent and should not be, if compromised, would not compromise the whole authentication data. Strong customer authentication would apply for all European Economic Area transactions unless there is an exemption. Let's have a quick look of the factors, and then we talk about the exemptions. Now, two factors of three. We have something that the cardholder is, or inherence. So this could be a biometric, could be an iris scan, it could be a fingerprint, it could be a voice recognition, it could be your hand or a keystroke dynamic. So it's one of the most innovative authentication approaches. There are many that are coming in the industry every day. It's important to say that actually the EMVCO had not regulated the biometrics data elements, and that's something that would be handled by the issuers and their application of strong customer authentication. Now, something that the cardholder knows, and this can be a PIN, one-time password, a phrase, or knowledge based in the challenge workflow. Pretty standard. Oops. Emmanuel. Okay, something that the cardholder has, and this is actually very interesting. So something that the cardholder has is not necessarily physical. It could be also an app or an algorithm. And if it is in this context, if it is used as a device, it is only a device that can generate a dynamic element that can be securely transposed. And in this context, for example, if an SMS with an OTP is sent to a device, the SMS actually proves the possession of the SIM that is associated with this device and not the device itself. And another interesting element that can be used as possession. So, for example, the card details and secure code are not considered a strong customer authentication factor. But if these are in a dynamic way generated, such as, for example, using network token, a network token can be evidence of possession of the underlying payment method or the card details. So this one is a very interesting one going forward. All right. Okay, so let's talk about exemptions. Not all European Economic Area transactions must be strong customer authenticated, and merchants and acquirers should be using exemptions where available to help the cardholder experience. So we don't want to introduce unnecessary frictions to the transaction flow if not required. Okay, so what are these exemptions? We have the low value transactions, and I speak about those in details in the next slides. We have low risk transactions, and we also have trusted beneficiaries. Let's see each one of these in details. Okay, so the low value transactions, it's not a very strong exemption as it's up to amount of 30 euro and also cumulative amount of up to 100 or cumulative count of up to 5 transactions since the last time a strong customer authentication was performed. It's something that only the issuer would be able to monitor and count as it is on a cardholder or account level. We do recommend that low value transactions are actually submitted in authentication, and it's up to the issuer to say if strong customer authentication is required for this if they have reached the threshold. All right. Low risk transactions. So both acquirers and or issuers are allowed to apply transaction risk exemption. The transaction risk exemption would be applied on a transaction level. So each one of the industry players can assess individual transactions. And if they deem this low risk and they are under the regulatory fraud threshold, they may apply a threshold and not request strong customer authentication. Well, for this one, it's important to say that also the merchant should be under the regulatory thresholds, and this should be monitored and maintained throughout, the mandate. All right, trusted beneficiaries is something that it will be in the control of the issuers, and cardholders will be presented with an option to enroll merchants during the strong customer authentication experience, whereby if they come back again to this merchant, the issuer may not request strong customer authentication for the consecutive transactions. All right, good news. There are more transactions that fall out of scope and would not require strong customer authentication given some prerequisites are met. So here we have, Moto or transaction obtained in mobile and email environment. We have merchant initiated transactions, and I'll speak more about this in the next slide. And we also have the one leg out transactions, or more familiar term in the industry, international transactions where one of the parties is based in Europe. Oh. Yeah. All right. So just a reminder, Moto or transactions obtained in a mobile or email environment would be out of scope, so they would not require strong customer authentication. In fact, the current version of 3DS2 does not support Moto transaction, but in the next generation of 3DS, we would be able to authenticate these transactions as well. It is recommended that we don't suddenly see traffic moving to Moto, as Moto is traditionally perceived as higher risk from issuers, and the schemes would also actively be monitoring if we're flagging transactions as Moto to avoid strong customer authentication. Thank you. Well, MIT or merchant initiated transactions, we good? We're good. It's actually a very important one, as there are various flavors of this. So, for example, recurring transactions where the first or the initial transaction of a series of recurring is strong customer authenticated are qualified as merchant initiated transaction. It means the cardholder is not in session, and this may be processed without not even authentication, without strong customer authentication, but directly in authorization. Another very useful use case or scenario is if the merchant is running a card on file business model. When in the first transaction the cardholder enrolls that card and is strong customer authenticated, the merchant may submit unscheduled or transactions for any amount without strong customer authentication under the MIT framework. And again, regardless of the transaction amount. All right, one leg out or international transactions where one of the parties is not based in the European Economic Area. So for example, if a merchant is receiving transactions from issuers based outside the European Economic Area or vice versa, strong customer authentication is not required, but it's recommended on a best practice approach. Oh, it's working. All right, so what have we done to help you comply with the PSD2 and strong customer authentication mandate? So 3DS2, it's a protocol that actually supports a strong customer authentication of different factors of authentication and different authentication channels. In some countries, 3DS1 may be compliant with the strong customer authentication, but it does not support all authentication flavors. So for example, it does not support the exemptions. Yeah, that's it. Yeah, thank you. More. All right. Okay, so we will be supporting various integration types, and please come to talk to us or our integration team about those, the minimum required data and the optional fields that may be submitted. The importance here is that with 3DS2, we will be supporting we will be supporting 10 times more data that will help actually issuers authenticate cardholders in a frictionless flow or without having to step up and request the cardholder with a challenge. Okay, we are off the slides completely. So we can talk about the data fields required and optional afterwards. And let's look at the frictionless and challenge flows now. So assuming the transaction falls under the regulation, but there is an exemption that we may apply. So that basically would mean that we can authenticate the transaction without the challenge, and the issuer would complete the authentication just with this data that we're able to provide at the start of the authentication. So once the authentication is approved, we would automatically submit the authorization request, and we would confirm back to the merchant and the cardholder that the payment is completed with the authentication data. So pretty simple. There is in this workflow, there is no redirect to the issuer ACS or to the server where the issuer would challenge the cardholder. The cardholder stays at the merchant browser and waits for the transaction to be completed. So this would be slight improvement on the current 3DS1 experience. All right, let's see the challenge now. So the first flow is basically the same. We have collected all the data from the cardholder and the merchant, and we have submitted the authentication request. But this now is under the regulation, and strong customer authentication is required. So the issuer must step in, so they don't complete the authentication here. They actually request a strong customer authentication, and that was where this challenge must be completed. So we would present the cardholder with the URL of where the challenge will be completed, and once the challenge is completed, the issuer would close that session for the cardholder and would let us know so that we can proceed with the authorization of that payment. So once the challenge completed, we submit the authorization, and we can inform now the merchant that the payment has been completed with the authentication data. All right. And that's basically in a nutshell the challenge flow, where checkout would handle all the redirect messages and the cardholder would sit and wait until the payment is completed. All right, so how can we optimize this whole strong customer authentication flow and approve the merchant authorization rate and convergence rate? So we are working on a few other internal products. So our risk engine on Prism has been enhanced to provide a real-time scoring of each transaction. We would be using this risk score to apply a transaction risk assessment exemption. And we also, on top of the risk evaluation, we are building a strong customer authentication mandate logic, which would evaluate if the transaction falls under the mandate so that we can request preemptively the authentication and avoid having the transaction being declined in authorization. We have one more detailed slide, exactly the flow of the handling of the mandate. And we're also preparing for 3DS 2.2. So currently the industry is getting ready for 2.1. A lot of the merchant and acquirer exemptions are actually supported with 3DS 2.2. And of course, we have a great interest in getting ready for this. But the expectation would be that issuers would support, and I see the Visa people in the room nodding their head, issuers would be supporting 3DS 2.2 perhaps in second half 2020. All right, so let's see what we're doing about handling the mandate so that you don't worry a transaction that should have been authenticated because of a mandate, it's declined in authorization to comply with the regulation. So as I said, all the transactions that hit our gateway will be real-time assessed by our risk engine. The risk engine may request a step up. That will be purely based on the risk of the transaction. And in addition to the risk, the strong customer authentication logic may request a step up due to the mandate. So assuming a transaction is low risk but falls under the strong customer authentication mandate, for example, a low value regular transaction that nevertheless may be rejected in authorization because the issue hit the amount or counter limit, would be sent to authentication to avoid being declined in authorization. Right? And that basically would show the flow transactions. Oh, yeah. Building for the fallback, or in case, for example, issuers would not assess correctly transactions that are out of scope. So issuers have asked that there is a flag that would identify out-of-scope transactions, as it's easier for them to work around the flag rather than assessing the whole transaction. Well, this is unrealistic, having other partners in the world where this regulation does not apply. So obviously merchants would not be flagging each transaction as out of scope. In the event that issuer incorrectly assess a transaction and they may request strong customer authentication, we are building another fallback logic that would automatically upgrade the payment request to authentication so that we can, on your behalf, handle the decline, present the cardholder with a URL for challenge or completion of 3DS authentication, and resubmit the transaction in authorization so that you don't lose that transaction. And this is how it will basically work. So given specific response codes in authorization that tell us the issuer wants to see the cardholder, we would request 3DS authentication and resubmit the transaction in authentication after authentication has been submitted. All right. All right. So finally, getting you there, the things that you should consider. I hope I made it clear in that workflow, in that authentication workflow, that there are many additional messages that a merchant may opt to support unless you want to use our hosted solution, whereby we'll be taking care of all the correspondence messages with the individual scheme DS servers and issue ACS to facilitate the challenge and complete the authentication. So if you in Checkout, we believe that merchants should be busy with business and we should be handling the authentication and payment flows. That's why we are presenting our new Unified Payment API, and Matt is here to speak more about this. But we will have those two options, whether you would like to handle the authentication messages yourself directly or allow us to do that for you. And our recommendation, given the state of the industry and the maturity of the issuer ACS and the scheme DS, is to let us handle the authentication for you and make sure that you comply with the PSD2 regulation. So I'll pause here and give the floor to Matt to present the Unified Payment API, and then I'll return back to the stage.
Is it good? Hi, everyone. Let's get set up. So my name is Matt, and I'm the product lead for the Checkout.com payment gateway, and I'm excited to introduce you all to the Unified Payments API, and also explain how you can use it to take advantage of our 3D Secure 2.0 solution. So the Unified Payments API is designed to future-proof your payments, providing you with a single streamlined integration, enabling you to make payments with any payment method. Now, to meet the ever-changing set of consumer demands, businesses like yours require a payment service provider who is constantly iterating and improving at the same pace as you. Now, Checkout.com is the perfect partner for that because our solution acknowledges that as your business needs change, your payment methods and payment flows do too. Now, that's why our API provides you with an integration where adding new features or new payment methods after you've already integrated requires very minimal rework. So by using the Unified Payments API to future-proof your payments, you'll be able to spend less time working on API integration and more time focusing on your business. Now, when requesting a payment, you specify either a source if you're doing a pull transaction or a destination if you're doing a push transaction. And the type of source or destination that you specify defines the payment method used in the payment. So say, for instance, if you've integrated using our Frame solution to tokenize your customers' cards, once you receive that token from us, you'll specify the source type as token and then provide it in the payment request for processing. But now let's say you've just launched in the Netherlands and want to add a new payment method for your customers to use. So, for example, the Dutch payment method Ideal. So to create an ideal payment, it would be just a case of specifying the source type as ideal this time, and then providing a slightly different set of fields in that same request. So it's super flexible. Now let's take a look at 3D Secure 2. So when designing phase 1 of our solution, we wanted to remove as much complexity from you and the customer as possible, and also provide an easy upgrade path from 3D Secure 1 to 3D Secure 2. So what we did was to ensure that we maintain the same integration experience for both versions of 3D Secure and abstract any complexity away from you, the merchant, through the use of something called the interceptor. Now, by doing this, it also meant that if you had already built support for 3D Secure 1 in the Unified Payments API, when we released our 3D Secure 2 solution, there was no additional rework required. So when requesting a payment through the Unified Payments API, we will attempt to automatically detect if it falls under the SCA mandated area. And if it does, we'll provide you with a redirection URL, which you'll need to send your customer to. And this is bringing them to this interceptor, which is a piece of middleware responsible for identifying if there are any exemptions that could be applied, collecting all the necessary information about the cardholder, so things like device information, and then triggering the authentication request to the issuer. Now, if the frictionless flow is then invoked, we will immediately request the authorization and then send your cardholder straight back to your online store without any intervention required from them. And then if there's a challenge requested, the interceptor will handle all the back and forth between the cardholder and the issuer on your behalf before, again, requesting that authorization and then sending the cardholder straight back to your online store. Now, internally, we also have a fallback mechanism where if it isn't possible to perform a 3D Secure 2.0 authentication, we'll send the cardholder down the 3D Secure 1.0 route instead to ensure that authentication does take place. Now, again, all of this complexity is handled by us internally, whilst providing a seamless payment experience for you. Now, as a final note, before I hand you back to Milena, I encourage you all to check out our online documentation at docs.checkout.com for more information on the Unified Payments API, or you can come speak to me after all the presentations. Thank you for listening, and back to Milena.
Thank you. Thank you. There is only one last piece on our presentation before we hit into the discussion panel, and this is what's next on the checkout authentication roadmap. So in phase one, our fully hosted solution is ready, and it's ready for launch given issue adoption. We are monitoring the issue adoption, and since currently it's slow, we have not launched it to disrupt more the payments. We expect that issuers would come online around the September deadline. So all checkout merchants who are currently supporting 3DS1 will be automatically enrolled and onboarded on the 3DS service. Then 14th of September is still the effective regulation mandate date. And all merchants in the European Economic Area must support 3DS2 to comply with the regulation. And looking further on the roadmap, we have phase two of support for the direct JS SDK and various mobile SDK, so Android and iOS. And we also have beyond that timeline, so in 2020, we'll be looking to, well, first of all, issuers would roll out 3DS2 across the globe. We'll be looking to certify for 3DS 2.2, and we'll be looking to support various authentication approaches. So, for example, delegated authentication. We'll be supporting the travel agent platform, payments, and authentication. And this is a very interesting discussion. We can speak with merchants who are in the travel and entertainment industry later on. And we'll be also looking to support the tier A exemption. All right, a quick finish. So here is a link to all the resources that you may refer to. Obviously, the EMVCO public documentation, the schemes have produced lots of merchant material as well. The European Bank Authority and our checkout documentation. Yeah.
Can you hear me? There we go. So my name is Lewis Jones. I'm the communications manager here at Checkout. And tonight I'm going to be moderating this panel where I'm going to put your questions to Milena. And we're also very privileged to have join us our friends from Visa as well. So without further ado, I'll let them jump in and introduce themselves. Milena, do you want to go first? So you want to overview this? Yeah.
So besides being the Warren platform, I'm the product owner for authentication. So my team is actually here sitting on the first row. Okay.
You don't hear? Use the mic. That one. Hello.
Hello. And I'm more than happy to help any merchant in the room, or there were a couple of wallet providers in the room, or any other, even the travel entertainment platform solution, anything that you may be in doubt of how to apply strong customer authentication and what is required for you to be compliant with the regulation as of 14th of September.
Good. Good evening, everyone. My name is Davide Pasinato. I work in Visa. It's 8 years. I'm actually supporting merchant and partners Visa to produce solutions that are, of course, e-commerce driven. But in the past 2 years, I've been focusing on the 3DS and the authentication. And today is we are rebranding that into Visa Secure to actually better fit the purpose of the authentication, regardless the version of the 3DS we are talking about, as this is a standard that belongs to EMVCO. So today I'm here actually to help you on understanding where we are with our program, as I'm now leading what is called Visa Secure Production Program, and where we are in terms of integration so far for the European market, particularly on the traction we got with issuers, as well as with merchants. And that's it.
Awesome. Okay, well, let's kick off. So what was the, let's recap, and what was the intended purpose of this legislation right from the outset?
Thanks, Luis. So the regulation really aims to make the electronic payments environment safe and secure and to reduce the risk of fraud. It's not only reducing fraud, but it's also improving the cardholder experience. So we see 3DS2 or the relevant scheme products in the case of Visa Secure as the protocol that actually helps reduce fraud and improves the cardholder experience.
Absolutely. This is the ultimate goal. I mean, in the end, it's the customer we are caring of. So the point that was mentioned to you today, there are going to be instances in which an authentication is going to be required, and some other instances in which you can raise an exemption instead, right? What we at Visa will be looking at is just to try to keep the right balance, and therefore try to best serve the customer experience. So from what we can see today, we really want to have an improvement with data quality that are carried over in the authentication request messages, and the more the quality of the data are populated in the right way, the better it is for the frictionless experience that was presented to you by Mila and I earlier today. Why we believe in that? We believe that of course, long term, 95% of the use cases should be going by an authentication given with no cardholder interaction, as this is ultimately the goal we are trying to achieve based upon technologies as well. So you have to think about the protocol as keep evolving their views. So today we are offering version 2.1, but we are looking to the 2 and to the 3 coming up later on. So ultimately, where we are going to is to have biometrics sort of approach in which you would have a lot of way to leverage technologies to try to optimize authentication without having the need of an interactive challenge with a cardholder.
And we've spoken about a couple of the ways that sort of consumers and customers can go about sort of authenticating.
Yeah.
Sort of what does that customer journey look like? You know, what are the ways that they will kind of see pop up on their smartphone or when they're browsing?
So in essence, what we are doing, we are testing basics, so the web flow, which is something that everyone will go nowadays when they are experiences their purchases across a computer, for example. Absolutely, the intent here is to try to make it happen in the frictionless experience, therefore try to get an under a second authentication done based upon data quality, and thanks to some of the technique, including JavaScript, that are run by provider in the merchant hosted pages, for example, you could actually be able to get a lot of information and send it across to the ACS, means the issuer buckets, for them to determine the level of assessment with regards to the risk, and therefore try to grant an authentication in the frictionless experience. If a challenge otherwise is required, of course, there are some techniques that we are particularly looking at. We know that the most used and uptaken in Europe is the SMS one-time password, but there are better solutions coming out in which, of course, we at Visa are going to be pioneer of as well, to try to make sure that authentication are done by, for example, knowledge-based challenge kind that are more friendly to customers. One of them could be image recognition. This is something that, an ability of an ACS means the issuer to be able to produce something like a challenge screen that would then define a friendly feature that the customer can select and click on for them to be able to meet one of the strong customer authentication criteria that was detailed earlier on by the program.
David, can I perhaps add here? So we talk about the protocol evolving and also moving to more frictionless transactions rather than challenging.
Yeah.
And the schemes are looking for other methods of complying with the two-factor mandate.
Yeah.
So for example, we were discussing early on that the device or something that the cardholder possesses can be, of course, physical, but also non-physical, such as an app or an algorithm, as long as we can securely decrypt and transpose that. Having said that, one factor device or something that the cardholder possesses. And knowing now the regulator is looking with good eyes on network token as a way of achieving knowledge-based factor, we can indeed move to almost entirely frictionless authentication experience.
Yeah, it sounds like a very good way forward. I mean, the tokenized world would help out a lot to try to identify, criteria of security and be able to assess the risk to the right level. I mean, you take an extra layer of security at the time you're actually consuming a token instead of a fund. For other reason, we got more control over, example, cryptographic information, such as the token cryptogram, which is something that we are checking at the time of the authorization as well, not only as part of the authentication. So in both legs of the, let's call it authentication and authorization pairs, we are in a position to validate data. And that's important when it comes to security, of course.
Awesome. So what actually happens then if a merchant hasn't implemented the right procedures in time? Like we're marching towards this 14th of September. What does this actually mean? What are the implications for not enacting and sort of implementing some of these processes?
Yeah, well, do you want to answer that first?
Question.
Okay, thank you. Well, I guess we have good news since last Friday.
Yeah.
So what last Friday EBA announcement actually mean is that if either the merchant or the issuer is not ready to support strong customer authentication, they don't necessarily have to decline this transaction. So we still have to get ready for strong customer authentication. Everyone in the industry should get ready, issuers, acquirers, and merchants, and they should work towards the date of 14th of September. But with now this transition period, we have the comfort that if someone in the industry is not ready, we don't just drop transactions.
Correct, absolutely. This is exactly the latest from EBA. And then on the top of that, this is just not a sleeping time or this is the moment you want to move forward and, maybe shape out a better strategy for meeting your business requirements, right? But having also a way to do it rather than a hard way, try to have a plan clear in place for you to meet compliance with PSD2 a certain point in time, and that may be differ market by market. So this is something that, of course, regulator will communicate later on as part of the initial EBA com that came out on Friday.
And in terms of these transition periods, how should merchants be working or sort of giving forewarning? Should they be directly engaging with the regulators themselves, or how does that process work?
We suggest merchants to actually talk with their partners, therefore with you, particularly in case of your merchant, to be able to get the latest in terms of the way that the solution can be mitigating, your needs, and in the short term and in the long term as well.
And just to add to this, Checkout as an acquirer has an obligation of getting all our merchants on a strong customer authentication solution by 14th of September. And we'll be working as we are with all merchants that currently are not integrated with 3DS.
Yep.
And so now we've heard about the implications and what this potentially means. What should merchants be doing at this stage to be preparing themselves for this legislation that's coming in? How should they be preparing for this?
Well, in the case of checkout merchants, we should be really looking at the current integration, and if we need to upgrade to the Unified Payment API to take advantage of the strong customer authentication logic, so that you let or allow us to handle all the mandates, all the exceptions, and out of scope transactions. it's interesting to look at impact given worst case or best case scenario. So given everyone is ready and the authentication experience is a really smooth cardholder journey, this would basically improve and increase revenue for merchants. But given we have the worst case scenarios and issuers are not ready or they erroneously start declining transactions, given this is September, it's pre-peak season, it's pre-Black Friday season, it's a very important time of the year for merchants. Perhaps merchants should take a look at what are options there.
Yep, and if I may add from a Visa perspective, all I can say that the good news is that all the checkout merchants have been preloaded to our systems. Therefore, they are actually ready to offer 3DS 2.1 experiences as soon as you guys are ready, and then you give the green light for activation.
Cool. So we're going to jump into some audience questions now. Thank you for everyone who have submitted these in advance. We'll also do a roaming mic if anyone's got any burning questions just now. So to start off with, we've got a question here from, well, actually I'm not too sure who it's from, but how does 3DS work with delayed payments?
Yeah, sure. Cover that first. Yeah. Sure.
Okay, so delayed payments assumes that the merchant may continue the transaction in a time that the cardholder is not there. So at the first interaction with the cardholder, at the first transaction amount, this must be strong customer authenticated. And if there is a delay or progression of the transaction and changing the amount until the merchant is ready to submit that transaction, this would be then submitted under the merchant-initiated transaction framework, and it will be exempted from strong customer authentication. So the initial interaction with the merchant would be strong customer authenticated, and the next or extending the authorization period until the merchant is ready to submit that delayed transaction will be out of scope.
Yep. The clear distinction is where the cardholder is there, such as called cardholder initiated transaction. It's at the time that you are sure that your customer is there and is actually making that purchase. Whereas if there are delays to the shipment of the goods, then you may be in a position in which you want to trigger that authorization, and you know that cardholder is no longer there. That's exactly falls into the use case of merchant-initiated transaction. And Visa got a whole framework to help out a new one actually, being shaped out lately in line with PSD2 for actually being able to better support the ecosystem and make it clear to issuers that they should not decline as they're going to be having a better way now to recognize merchant-initiated transaction than it was in the past.
Another question here around subscription models. So what happens to the subscription for which the first payment was taken before the September the 14th deadline? So for customers who have been using their services for years, how does that process work with the strong factor authentication?
Yeah, so do you want me to start? I'll start off this time. So in case you do it before the deadline of September, you should be having in hands something like ideally the authorization response. That has to be something that you can carry over for the model of MIT framework later on. So there is really no difference in terms of the way that you're actioning today. You're going to be given a way to basically go ahead with what you have. From that moment ongoing, it means from PSD2 taking effect, at the time you actually are going for a subscription model, sort of, you have to be triggering an authentication at the time that the cardholder initiate that subscription with you as a merchant. And from that moment ongoing, you'll be storing that information by your provider for you to actually be able to support the MIT framework going forward. So for subsequent requests, you should be having that direct to authorization request done via the MIT framework.
Louis, don't hit me. I'm playing with the microphone. Yes. Okay. We have a question.
Sorry, guys, that wasn't my question actually about the subscription. So what you're saying basically, that was my question. So if the subscription happened before September, there will be no check, basically.
Yeah, in terms of the way that we don't guarantee that there are going to be no checks. I mean, what we are looking at is if you have that information in-house, means that if you have a way to retrieve that original authorization, request ID, then that's something that your provider may help you with, maybe, for subsequent requests. That's helpful. If not, we've been looking at how to actually make it clear to the ecosystem that could be a use case that can happen, that maybe, not everyone would have that information available, so they should not be declining that.
And perhaps I can help here. So there is something called the grandfathering rule from a regulatory and legal perspective. So contracts that had started before the 14th of September would not suddenly require strong customer authentication after 14th of September. If the cardholder needs to renew that contract, then strong customer authentication is required. And the other thing that David was alluding is around the merchant-initiated transaction flagging of the authorization transactions. So, for example, there are certain values that refer to the previous transaction or the initial transaction that was used to set up the recurring contract. And if we have today merchants that may not be storing that transactions or they're not capable of providing it, Visa and the schemes are looking for other solutions to help with PSD2 compliance. And Checkout will be supporting all of these for September.
So we've got another question here from the audience. So how does this all work when taking a higher amount than a 3DS amount? So how does it work with changing, amending, editing orders?
Yeah, can I go first with Checkout solution?
Sure. So if, assuming this is again in the recurring transaction scenario, it's basically regardless of the next amount, merchant-initiated transactions are out of scope, full stop. As long as the first transaction when the cardholder has given their consent to be enrolled in a recurring contract and the merchant would be submitting this transaction as merchant-initiated on the cardholder behalf, they're out of scope. It's only the first initial transaction of a recurring contract or when the cardholder is enrolling their card on file for further use by the merchant.
Yep. That's exactly the scenario. And again, to the point, we are going to be making sure that the ecosystem will digest that. I mean, in terms of helping out the, when it comes to authorization, to better identify an MIT request.
Another question here around how do you prompt non-present customer with two-step verification?
How do you prompt? Yeah.
Non-prompt. Non-present customer with two-step verification.
Yeah.
I have the feeling that has to do with merchant-initiated authentication request. So how would the merchant inform the issuer that the cardholder is not present and they are submitting the authentication without the cardholder being there? This is something supported in version 2.2, so not yet. In version 2.1, merchant may submit authentication requests for non-payment transactions. So the protocol can be used for card verification, which my personal opinion is not very recommended since the issuers are not very prepared for this type of messages. In the next protocol version, we would be able to submit merchant-initiated authentications whereby the issuer would know the cardholder is not there, so they would not challenge the authentication.
Yep. So as we stand today, it's absolutely correct. So it's an evolution of the service. It will come later. We suggest to do not do this, as is the version that is supported today, 2.1, is not meant to be for payments. It will be in the version 2.2, and then we got some early sight end of this year. So we will may be in a position to see, 2.2 specifications are out there. All we need is the ecosystem to be able to start digesting that and therefore getting up to speed on certification. So to the point you will come and you will be in a position to also call the authentication leg, raising yourself as a merchant-initiated transaction, whereas today you cannot do that.
Well, I don't know if we have any other questions in the room at the moment. Yeah.
I've got two if I'm cheeky. I noticed that the mention of the iOS SDK and the Android SDK was later, and we used the Frames SDK in both of our apps. So is there anything we can do before that deadline hits, or what should we do in that case?
I don't dare not fall now. So if you're using our iframe solution, you're ready for PSD2 already. Our iframe solution is upgraded with 3ds and we'll be handling that at the back end. So actually, if you are integrated with 3ds 1 already, depending on the issue participation of the next protocol, we'll be handling that for you. And there is no change in your integration. It's only the mobile SDK that perhaps you can say who the merchant is, and I see the integration team is in the room. Maybe I can get some help.
Yeah, we're from Bristol.
Oh, but hello. We talk to you after, during the networking drink.
Any other questions at this stage? Questions? Yep.
So it is a two-part one, but the first part is a one-word answer. So from what I understand, and I think this is data from Visa, I think you're probably the best person to confirm it, 3D Secure 1 has an 11% drop in conversion. So it's an 11% impact on conversion of 3D Secure 1. 3D Secure 2, from what I can understand, from what I see, isn't being particularly well adopted by everyone from September 14th anyway. 3D Secure 1, and maybe even worse, logging into your bank account to verify the transaction seems to be what might be happening. Are we ready for this to be rolled out in September? Like, as 11% impact at best, from what I can see, is ginormous across the whole industry. What's your thoughts on that?
Yes. So in terms of readiness, like, we are actually helping the ecosystem to be live in time for PSD2. Absolutely, we are aware that the ecosystem is not super ready, but we are doing our best to make sure that everything is in line, and we are actually assisting them on all the best possible scenarios. That's absolutely correct, that there are going to be instances in which you're going to be leveraging existing 3DS1 instead of 3DS2 solution. And with the help of your provider, you should be knowing that information upfront, so you know exactly as a merchant, when is the best way for you to trigger an authentication and how it's going to be looking like the outcomes.
And maybe to help David here, so if there are issuers who are not ready, they'll be working with the local national authorities to agree on a transition period and how they'll get ready for strong customer authentication. As David mentioned, some may be using 3DS1, and the good news is that Checkout will be handling the fallback to 3DS1 if the issuer does not support 3DS2. And the other good news is that if the issuer does not support neither 3DS2 nor 3DS1, they would not drop the transaction, or they would not have to reject the transaction, assuming they're working with the local regulator to get ready. And it's the same scenario on the acquirer and the merchant readiness. So if merchants are not ready or integrated with a strong customer authentication solution, as long as they have spoken to the acquirer and that acquirer has spoken with the local regulator, we have this transition period. I think you had the second part.
No, it's kind of two questions, one. That's perfect, thank you.
Is there a risk then that if you are ready as a merchant, that you get penalised for being ready?
Oh yeah.
Like, CFO at MyPay. If you are ready as a business, do you run the risk of then actually getting penalised because you're ready? I.e., if the issuers are so behind and they're still running old platforms, and you're running the new platform on MIT, CIT, does that not? Are you going to get penalised anyway on the success rates? Why don't you just hold off and wait?
It's actually a very good question. So when I mentioned that merchants perhaps should individually assess the impact to their, to their business, given where you operate, which countries, and what is the readiness of the issuers in these particular countries. And indeed, it may add an extra complexity to the payment flow and delay in the whole payment. So the cardholder perhaps is hanging there until you figure out whether the issuer supports or not, or what is the state of the issuer ACS. So our solution would be checking, for example, before we submit the transaction in authentication, if the issuer supports or not. The schemes and the issuers have asked, if we don't support, don't send us this request. One thing, they may decline transaction that has been attempted in 3DS2 and it's not authenticated because of the liability shift. And second thing, it may delay the whole payment process. So we would only be sending 3DS2 requests to issuers that support, and we would only be sending 3DS1 requests to issuers that default to 3DS1. In all the other transactions, we would attempt to apply exemption, or we would submit straight into authorization until all players in the industry are ready. Did that answer more or less? A lot of issuers may be ready with 3DS2 without the challenge. So perhaps we may see at the beginning more transactions being authenticated but not challenged until they fine-tune their challenge method. And yeah, as we try to allude, it will be a work in progress, and the protocol will evolve in the next perhaps a year.
Yeah. And we are working with providers of ACS to make sure that they are actually looking at challenges scenarios more, being able to offer them vanilla solutions to their issuers. In the end, we are not talking about many of them. So, providers of ACS solution are the well-known people to us, and we got a relationship with them, and we are trying to push for having a solution that is going to be in line with PSD2 ready by September.
Hey, my name is Jim Deliveroo, product manager. I have a couple of questions actually. First one is coming from TRA. So you guys, correct me if I'm wrong, acquires needs to be under certain values, 13 basis points under 100, I guess. So in your slides, it says merchants also needs to be hitting that target. I believe that is going to be I don't see that. It's the first time I'm seeing that. Can you explain it? And one more question. What is that number? It's very magical. No one explains what that is. Can you explain it a little bit?
Yeah.
You want to start?
It's okay. It's an acquirer exactly call. Absolutely. The fraud level control should be done by different factors. There is the amount involved, as well as some threshold that are given by, of course, EBA. The point is that is actually an acquirer call. Okay, so they should be in control over the fraud rates. Ultimately, it's their decision whether or not, for example, to exercise some exemption to strong customer authentication, basically upon their views, of course. Absolutely fair to say that via your provider, you should be actually be more transparent with that regards. It's not strictly related to you, but ultimately the input should be coming from you. Okay, so the TRA expectations or risk-based analysis should be coming from you first as a merchant, saying, okay, I recognize that this is a genuine customer, and I tell to my provider that information across. Your provider then will be able to cascade that down in the ecosystem.
Thank you, David. And just to add to this, so the fraud rate thresholds have been defined by the regulator. Yeah. They start from 13 basis points for the issuers and acquirers, and indeed it is acquirer presumption whether the merchant fraud rate should be taken into consideration, and if that is taken into consideration, it's 15 basis points for the merchant, and this should be for the last 3 months, and the merchant should maintain a fraud rate below 15 basis points.
Is it monthly TC4 to save finance versus the number of orders, or is it something else?
Yes, it's calculated on a monthly basis, and it's taking into consideration e-commerce, European Economic Area volume only. So you may exclude non-European Economic Area, and you may exclude motor transactions.
Another question over here.
We have one more mic.
Thank you. Yeah. Hi, my name is Mark. I'm a software engineer at Gusto. My question was mainly for Checkout. Around the differences between your custom solution versus hosted. Like I understand implementation-wise, we have to pass a lot more data for the custom solution. But if a customer is going through your hosted solution, is there any visual differences? What's the UX changes?
Great. Thank you for that question. I've been waiting. I was wondering if there would be anyone in the room that would actually want to handle not only the extra data fields, that's one thing, but handling the full authentication flow. So actually having to send, so in the new 3ds 2 version, there are 5 messages that you would have to support if you'll be handling the authentication yourself. There is a preparatory message whereby you send the URL from where the cardholder accesses the merchant website to the issuer for later comparison of where the challenge will be performed. So then there is the authentication request. If that ends up being challenged, there is handling the challenge URL and receiving the challenge result from the issuer, and then finally submitting the payment request. So there are additional few API calls that you would have to add if you want to directly manage the authentication. Additional fields, so for example, billing address or how many times the cardholder had interacted with the merchant, they can be submitted with the payment request without having to handle the authentication flow. And we'll be opening up all these optional fields with September. It is still early to say how they would impact the authentication, but as David said earlier, the more data we are able to pass to the issuers, the better chance of having risk-based or frictionless authentication.
Hi, I've got a question about the unified payments API. I don't know if you're the best person on that.
Matt is still here.
Yeah, so if I understand it correctly, there's this interceptor.
Yeah, it's coming.
There's this interceptor page or middleware that's going to, I guess, apply exemptions if the payment's eligible for exemptions or not. Is that same for outer scope, so MIT, or is that something the merchant has to pass through?
So MIT would be submitted directly into authorization, and what will be making sure that all the MIT flags, so for example, if it's a recurring type or if it's a card on file, including that previous transaction ID, are included in the authorization message.
Okay, so is that something Checkout would handle? Okay.
Yes. So this is our hosted solution via the Unified Payment API. One thing we will look if the transaction falls under the regulation. If it falls under the regulation, we would enforce this to authentication if it was submitted as non-3DS payment request. And if it's out of scope, we'll make sure that the authorization message carries all these elements that would inform the issuer this is out of scope, so don't trigger strong custom authentication or don't decline this authorization request.
Okay, thank you.
Cool. Any final questions?
And maybe just to add, the interceptor is our way of handling all these authentication messages between the different DSs and the different issue ACS. The logic would indeed sit at the gateway and would enforce 3DS if required, or make sure that we apply all the flags in the authorization.
Cool. So obviously the most frictionless flow probably on a mobile app is probably going to be with Apple Pay or Google Pay or something like that. But the Apple's and Google's wording is a bit random about amounts and subscriptions. So we're a subscription business, but our pricing is variable. And we're wondering, is that a viable solution to go with like a Apple Pay or Google Pay card on file, as it were? Because our amounts change from month to month or week to week.
Thank you. I think you mixed a few questions there. So Apple Pay and Google Pay are wallet type transactions, in which case the device, the mobile device itself, tokenizes the PAN, and all consequent transactions are submitted as token transactions in the scheme terminology. So as long as the cardholder is strong customer authenticated, when they enroll that payment method and convert the PAN into token, the following transactions are already strong customer authenticated by the token vault. And in this case, the token is linked to the channel, so being the mobile, and the token is the factor, the evidence of possession factor being the cardholder data, the card data and the security code.
Cool. So just to finish up this evening, I'd like to just...
There was another question in the back.
Oh.
Sorry, last question. So where does the liability sit with when you've done a transaction and then it's increased? So what we've spoken about when it's a delayed payment.
Yeah. So if it does leverage the MIT framework, you should be having the first authentication performed at the time you subscribe to something. Therefore, that liability shift is fully under the bucket of the issuer. Okay. For the subsequent one, from a Visa rule perspective, liability will sit with you. However, let me say that this is something that, of course, it's something that you may dispute back, as your first authentication was performed in a proper way. Therefore, the MIT framework, as I said, is changing to better detail that scenario and be able to retrieve back to the original authentication. So transitionally, you will get protected as well. Okay, but as it is today for Visa rule, you initiate the transaction direct to authorization with no element of security, if not the ones that you perform at the very beginning. Okay.
Cool. So definitely final. No more questions. Cool.
Well, we're still around, so we can have a drink, cool down.
Of course.
Have more questions.
Just to finish up then, I'd like to run along the panel and just ask for your sort of one piece, your one takeaway for merchants and everyone in the room tonight. If we start with Davide.
Okay, one takeaway. So, I don't know. To be honest with you, it's been really good. Being here, and I believe that generally, I mean, it's a good way for having an interactive session, which I see a lot of good questions coming out from the crowd. I say, don't be panicked. Let's talk with your provider. We're going to be assisting everyone in this, let's say, journey to the PSD2, and it's a good way. Thanks for having me here today.
Thanks, David. And actually, to add to this, I have to say that it's probably the first product and program that I see the schemes really opening up and helping. So my one takeaway is please come to speak to us if there is a scenario that you're maybe not sure about, or maybe it's new and it's not yet covered or discussed, and we will take it away and we can discuss with the schemes. We see that both the regulator actually and the schemes are opening up for new scenarios covered under the MIT framework or any other framework that we may not have heard to help improve the PSD2 experience and the cardholder experience. I know what you're going to say.
For me, it would be to make sure, if you're not already using it, make sure you check out the Unified Payments API to ensure that you are.
Thank you. Cool. So can I get a round of applause for the panel here? Yeah, and just like with SCA, Checkout.com's got you covered. So we've got pizzas and more beers and drinks. So go and help yourselves network and ask questions if you have any others. Yep. Cool. Thank you very much, guys.
Thank you. Thanks.